In international trade, countries buy and sell goods. A tariff is like a tax on those goods when they cross borders. For example, if a car made in Japan is shipped to the US might charge a tariff. That means the importer pays extra money to the US government. Tariffs can protect local businesses by making foreign goods more expensive, but they can also lead to trade wars and higher prices for everyone. In short, tariffs are a tool countries use to manage trade and protect their economies. The year 2025, well, it saw a sharp rise in trade tensions between the United States and China. This escalation was marked by a series of tariff announcements and retaliatory measures from both sides. In early April, the US announced a 10% tariff on all imports. And yeah, that was a pretty big move since it targeted goods from all countries, not just specific ones, but the situation with China, that escalated real fast. On April 2nd, existing tariffs on Chinese goods jumped to a staggering 125%. Then, just a week later on April 9th, a 104% tariff on Chinese imports came into effect. On top of that, there was a 90% tariff placed on low-value Chinese packages, with plans to raise it to 150% by June 1st. Now, the US did offer a 90-day pause on tariffs for around 75 countries, but here's the key part. That exemption did not apply to China. The exclusion of China from this pause made it pretty clear that the US was trying to put pressure on them. All in all, these actions marked a serious escalation in the ongoing trade dispute between these two economic giants. China wasted no time in responding to the US tariffs. In a tit-for-tat move, they imposed retaliatory tariffs of their own, totaling 84% on a range of US goods. These tariffs hit key American exports like agricultural products and automobiles. And beyond just the economic side of things, China also took a firm tone in its messaging. Chinese officials accused the US of economic bullying and even vowed to fight to the end. That kind of strong language really showed how determined China was to protect its interests and not give in to US pressure. And then, in a move that hinted at possible trouble for US businesses operating in China, the Chinese government issued a warning to its citizens about traveling to the United States. The advisory cited the risk of arbitrary detention and interrogation by US law enforcement as a reason for caution. So yeah, China's response made it clear. They were ready to dig in for a long trade war with the United States. These escalating tensions had the potential to disrupt global trade and create a whole lot of uncertainty in the world economy. So, the trade war between the US and China sent shockwaves throughout the global economy. Many countries caught in the crossfire started expressing serious concerns about the escalating tariffs and, well, their potential impact on global trade. The European Union, which is a major trading bloc, responded with tariffs of its own on $24 billion worth of US goods. These tariffs, ranging from 10 to 25%, specifically targeted iconic American products like Harley-Davidson motorcycles and Kentucky bourbon. Other key US allies didn't stay quiet either. Canada, for instance, imposed a 25% tariff on US vehicles, while Japan went ahead with a 24% tariff on a range of American goods. But you know, the trade war wasn't just limited to developed economies. Developing countries like Vietnam and Cambodia also faced significant tariff hikes, with rates reaching as high as 46% and 49% respectively. These kinds of tariffs had the potential to really disrupt supply chains and hurt industries that rely heavily on global trade. All in all, the widespread condemnation and retaliatory tariffs from around the world really highlighted just how interconnected the global economy is. What started as a bilateral dispute between the US and China had evolved into a much larger issue, one that was creating global instability and, honestly, a whole lot of uncertainty. The immediate consequence of the escalating trade war? Market volatility. Stock markets around the world fluctuated as investors reacted to growing uncertainty. Even after a brief pause in tariffs, concerns about long-term impacts remained. Tariffs raised prices for consumers and costs for businesses. Global supply chains faced disruption, delays, and uncertainty. The future of global trade and the world economy was hanging in the balance.